Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for June 6th, 2023. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. I want to start today off, first off, is we're going to be really focused here on corn and beans. I'll probably be doing another video just on wheat alone, just because, we've kind of broken, right? We're at different points in the marketing year for these contracts and these products. Wheat's, into a harvest cycle, something that we're not going to see in the row crops for some time. And we're really into weather markets, full swing, and the focus on first and foremost corn, and now, trickling into soybeans as well, is starting to really take note. So, to update us from last week's strategy of the week on Thursday, which you can sign up for in the links in the comment section, the information section of this video. It's a 1 week, every week I do at 1 p.m. Central, or 1:30 p.m. Central, excuse me. We cover the wide breadth of markets for about an hour and go over all the ideas and summary of price action for the week. And it's a lot of today. What we'll do and talk about in these strategy today has been on a bigger scale. Weather markets being the primary focus, and we'll look at charts here in just a second, but running through what some of not only the models are saying, but what we're just seeing, because so much of weather is like predicting markets and charts, right? You're following footprints in the sand, and then you use a model to try to guess where those footprints are telling you, ultimately the market is heading. The course of weather in the last several weeks, right, has been a narrative of, looking for this El Nino effect to come. It was forecasted to begin in May through June, and we just haven't seen it start yet. And to add to that, the start of hurricane season also hasn't seen some jet stream shifts that I've talked about. Basically that warm moisture coming up from the Gulf, and then getting picked up by the the west to east jet stream that then carries moisture over the continental U.S. and meets, cold air from the north, what have you. It's just, it's not happening right now. We have this depression and this vortex up in the northeast of the United States. It's been here for some time, for like the last week or so. There's been this kind of swirling winds and weather system up north, and that's causing over the Great Lake region this kind of southerly, almost at times east to west wind that we've witnessed. And actually that's what brought us the rain this last week, was weather formation coming off of the Great Lakes, which, okay, that's fine. But what we're going to look at here in a second, because the conditions report this last week was really abominable for the I-states. I mean, we saw drought conditions really get worse, but we're not seeing the weather, in my opinion. I'm not seeing what we normally see in terms of weather systems developing that will alleviate that. We know it's been dry the last 30 days. The I-states here, right, and up through Wisconsin and even down through Missouri. Oh, yes, North and South Dakota as well, and really just this one island of water in Minnesota. We're behind on precipitation in every way, immeasurable way. Anywhere between 25 to 75% behind here in most of the Central Plains. We've set the story here of the last month. We've been dry. We all know it's dry, and the weather forecasts, just seem to always be calling for rain that doesn't come. And I think charts are starting to showcase that. You can see some of that weather, some of these pop up, on isolated storms from that moisture that's really, I think, just evaporation off the Great Lakes being kind of construed over the small Great Lakes region. And when we look at where actual rainfall fell over the last week, in the United States, well, this doesn't look that bad. I mean, yeah, there's some dry patches in southern Illinois and Indiana here in Missouri, but generally speaking, right, you look at this at first glance and you say, oh, this last week, those problem areas, we should have gotten better, right? We got the rain, maybe an inch to 2 inches of rain throughout, Minnesota, through Illinois and Iowa, but did that, really help? When we start to break down, what it looked like day to day through these periods. Let's just take last week, right before the rain came, right? We were, so no perceived rain in the I-states region. The next following, couple days here, We actually got that rain. Okay. That rain fell, but if you notice where it fell, it was like an island of rain right along Lake Michigan and Superior. So again, it's that weather system bringing that moisture from the Great Lakes, but it's dumping it pretty much, right along the coastline, right? Down through Indianapolis, maybe you got some, but then south of there, even along the Mississippi corridor, Missouri, we missed. Ohio, total miss on all that rain, right? And then of course you bump the from that Friday through, rather that Saturday through today. That's why I didn't go to a range. Saturday through today, and you can see how nothing has fallen since then. So we got that 2 days of rain that fell pretty tight, and really it fell in major metropolitan areas. Yeah, there's some good acreage, just south of Chicago and into Indiana here where that rain was falling. And again, I should just bring up the Thursday, Friday where the rain was. There you go. Yeah, okay, so Champaign-Urbana, Chicago, and Indianapolis saw rain where, I mean, interestingly enough, right, it fell over major metropolitan areas, major suburban areas, most of, out to basically Aurora here, right? There isn't much in the way of farmland for this big quarter of the state of Illinois up here. Yeah, once you get west of Aurora, out through, to Rockford and beyond, you start to see, acreage, right? But where the rain really fell here, it seems to just be, on a portion of the state is my point, right? And it's really just fell on a major metropolitan area. Okay, so forecasts for the next 6 to 10 days and 8 to 14 days for temperature look rather cool. All of a sudden, that precipitation's back in the forecast, near normal precipitation. So we used to have this big below normal hovering over Lake Michigan and the I-states. So things look a little wetter in the forecast for the next couple of weeks. But, I mean, that's been a broken clock in terms of forecasting for the last about a month now. So, you need to see the rains come at this point. And I think markets are starting to respond that way, and we're seeing some activity. All right, so anyway, with all that being said, I think it's an interesting approach to take a look at the markets and to think that, okay, if the weather forecast, we're dry, right? How dry are we? Well, according to Karen Braun and some others on Twitter, Illinois right now is at a 50% good to excellent ratio. Worst shape this week since 2022. But the worst part is that the lack of rain and deteriorating soil conditions for 60% of Illinois subsoil was short to very short as of Sunday. That is tracking, if you chart out how subsoil conditions are tracking in Illinois, 60% of the state is tracking like it's 2012. Not 2013, which, by the way, if you look at the analogs, the price analogs of corn, July or December corn, this price chart looks a lot like 2013 to start with. Well, I think, and I'm of the opinion that is all shifting and changing. We obviously have weather markets that have brought a bid back. And let's take a look at what that looks like on some of the charts. Let's start with July corn here. December corn, I'm actually surprised July's up a little bit more than December. I'm kind of expecting the weather markets to really take over on the December contract and for there to be some bear spreading in this July-December bear spread. The reason I say that is it really hasn't made the progress over the last month or so, or last year or so, like the July Nove bean spread has, which, okay, just kind of flipping around here. Showing you those, but you see the July Nove bean spread clearly had a trend. It's flagging at highs, right? July Dece corn has been rather sideways in this range. We just keep finding resistance, so I would not be surprised to see this break down and try to fall back below support here, 50 to 20 cents under, and that would cut and honestly be favorable to December. But needless to say, July corn here trading 609 3/4 last. That's up 12 1/4 cents on the day. The last couple days have been a fight over the 55-day moving average, a fight of the old broken, wedge trendline support, was resistance with the 18-day moving average there and the 10-day and that trend line on the way down. There is arguably another trend line here, that was kind of holding. We came back up, tested it, broke through it. 18-day moving average has been supportive. The 10-day has moved above the 18-day, so you have your first bullish crossover event here while overbought conditions are kind of setting in. But the market seems to be pushing higher. We have 100-day moving average at 624 now, and the 200-day up at 646. I think a test of this downward sloping trend line and that 200-day moving average up there, somewhere in the 650 area, is probably where July corn is headed. And we'll look at more detailed chart there on the 4-hour time frame in a minute. And I think there's room here on this December chart too, right, to get back up to test into this inflection zone of support. There we go. This 540 to 560 area. I think we need to test kind of into it. We're just starting. We have our first test of it here now. And I would like to see December corn push through that, but certainly the reversal off the lows of today for corn look pretty supportive thus far. Right, we had an opportunity to sell off. It has kind of reversed the day, and it looks like we're going to be closing rather strong, which to me, any follow through tomorrow takes us back up above these levels. And we're on a hunt for resistance, right? 100-day moving average up above at 560. Look out for that area. As it aligns with, the old resistance there in March, right? The 560 to 575 area for December corn that we couldn't get back above was resistance and led to an 80, almost 80 cent drop there. Actually, it was because we got down to 490, so an 80 cent drop down to the current swing low. All right, so in the near term, corn has been coming back up off of its low. We pushed up to a new high for the month of May into, kind of the end of life for the month. From the 547 low to the 606 high at that point, basically the low to high for the month of May. We spent 2 days pulling back, hit that 576, 50% area, and onwards up towards the 620 target. The market has continued. June is now a higher high and higher low relative to May, which, gives you a reversal signal on the monthly time frame, with May having been your kind of tailed candled reversal, and now, June confirming, hopefully, with that push above. The next major area of resistance is, again, that downward sloping trend line, the 100-day moving average above us at 6. Let me get that right. Double check that. I'm sorry, the 200-day up there at 640. That's what it was, 646. The 200-day moving average up at 646. That downward sloping trend line that has really held since last year's contract high for July corn, all up in that area, very visible level, right? We also, December through March of this year, that was our first real supportive area on the chart for July corn. We broke through that in March. We held that area as resistance on a push higher, broken support, now resistance, and then the market continued lower. So we have this stair-stepping of series of lower lows and lower highs and swings for corn in the July contract since the 705 high last October. So this would be the downturn or the downtrend for 2023, which is mimicking 2013, Freudian slip there, that we've been talking about. We have a little bit of a bounce here from May, at the start of May, very similar to what 2013 is doing. But one of the key differences now that we're seeing is that people a little bit more educated on the matter than I am, and like, for example, Karen Ron on Twitter was pointing out we are kind of tracking 2012 like subsoil in Illinois. Now, that's a vacuum. That is just Illinois subsoil that is really bad that we're talking about here. But, it is an important I state that that drought-like conditions, unless rain comes, right, which would be very different than 2012, we're projecting out that 2012 has the capability of repeating itself from a weather event if we don't see those rains, right? If we see fields on fire. But a lot has to happen, right? You have to see the narrative of weather continue in that direction. And forecasts, certainly the way they shifted in the last 48 hours, don't favor that. They actually say that the rest of June is going to get a little cooler and, if anything, could bring some, rainfall. That's not going to necessarily, right, without the rain, it doesn't necessarily help that, the issue of being dry, but it doesn't, right, things don't necessarily look like they could get worse. All right, so the chart, though, is starting, at least in my opinion, is starting to show signs of, bigger technical reversals, and that's something to consider alongside this too. So, I mean, going into an end of the week with a WASDE report where it'll be interesting to hear what the USDA has to say, given I don't know if they're going to, be too apt to change demand just yet, considering they added in demand right on just our last report. But it kind of seems like, if anything, if they have the ability to, given how exports have been rather slower, there's probably some adjustment there to be made, and that might be said for on the old crop carryout as well. Needless to say, we are focused really on weather markets here. At least I am, because it seems to be every shift in these models, there is a 10 or 15 cent swing that's happening. Not that it's tradable, but it's at least noteworthy, because at some point we're going to go one way or the other, right? Rain's going to come. We're going to feel confident in the crop. The seller's going to find their resistance, and the market's going to go lower. Or it's not going to come. We're going to continue that trend of dry conditions, and the charts are going to continue to reflect that. They have momentum here to do it if they want, but in charts like soybeans, to flip the script now into the conversation for what's going on in the beans. And I do think, right, July corn there, 625 is our next resistance. That's a 50% swing off the highs. That 630 to 640 area has resistance. So I think a little higher in the near term, but be careful, right? Because there's clearly some levels, visible levels on the chart that over the next week, if we get rain while we're hitting these technicals, like, while we're watching and hoping the stars align, so to speak, for the bullish consensus, right? That if dry conditions continue, the bull trends continue, technicals turn bullish, blah, blah, blah. Well, the script can flip, right? If we run into these resistance levels we're talking about here that are only, 20, 30 cents away, that in a couple days' time we could get there, along with some rain in the forecast, boy, do things really, shift. So, got to be nimble. Pay attention the next couple of weeks to market price action if you're exposed, is the moral of the story, right? Don't fall asleep behind the wheel. All right, July soybeans, 13.53.5, last up 3.5 cents of the day. Today was, and yesterday is the consolidation above the 18-day moving average for July beans. We broke below it. The 18-day and 10-day are my short-term trend indicators that I use. We watched how in corn that 10-day has popped above the 18-day here. That reversal hasn't happened in soybeans, but certainly the multi-day rally now and recovery we've seen from lows is probably going to be enough to get those pretty close to it over the next couple of days, barring a very sharp sell-off. We are going to look at, though, right, how and why that could be the case too here. But for the time being, this looks like a chart that's trying to establish itself back above some levels it failed below, which is a bit of a turn. Now, that doesn't mean there isn't going to be up and down. There's always going to be up and down. But 1342.5, the lows of today being 40 quarter, and we're trading at 53 now. We've traded both sides of the book for the beans. Expanding for the last couple days, went above prior day's highs, went below prior day's lows. It's a higher high and a higher low or lower low type day, and oversold bought conditions, for beans that seem to be heading up towards, maybe a bigger resistance area. 200-day moving average up around 1452, with the 100-day up there around the same level, and the 55-day up at 1411. Now that we've found some swing support, the move back up to test this old range low around the $13.80 to $14 mark seems to be, kind of, I think, the move for July beans in the near term. Novi beans, similarly, I think they'll be heading back up towards this 1220 to 1250 area to test old support now as resistance. We have not actually broken above the 18-day moving average, though, in the November bean. but we're up 6 cents there on the day. So it's kind of weird price action in those old crop, new crop spreads, but we're flirting with a lot of the same levels, and the same similar trends seem to be, in the charts. Okay. On the daily time frame here, switching over, and we're going to drill down into the charts here for beans, and how, okay, there could be some resistance just above us. There is a downward sloping trend line that we kind of ran into right here, but we did, whoopsie. Sorry about that. Let me get my chart back up there. But hey, my information on the screen there in case you ever want to get in touch with me. We had a series of shorts and then maybe a potential extension short that had formed that was defining a trend lower, and I think that has broken. On a bigger time frame, though, we basically have traded 3 legs down into equal legs. If this 1562 swing high to low, measure it from the previous high of 1545 here. I mean, 100% of that would have been 1282. That's a pretty technical reason to think that there could be support here, and that we could be met with a rally back to $16. But I don't know. I mean, a lot needs to happen, right? I'm not saying that it is going to happen, but I like the support where it came, if it's there, right? All right, so now that we're rallying back up to 1380, if we just go straight up to 1380 and go through, it's not going to give people much opportunity to get in. And I also want to point out that basically 50% from the swing high to low here is around 1408. So, very visible resistance up around 1380 to 1400. And if we break through that, getting back up to 1440 and those 200 moving averages will be the next nut to crack. But I think it's possible, right? If we see this narrative continue forward, things will, shift, right? And it's going to be really important to pay attention to that weather and everything else that's going on here. In my opinion, in the next couple of weeks, we don't see it come. Conditions continue to dry out. We see that crop get stressed into next conditions report. I don't think we're going to be able to hang on to 192 million acres of corn and 181 national average yield and what was it, 89 million beans and 52. I don't think those numbers become achievable. And I mean, arguably they're not at this point either, but needless to say, if we had discounted, because of, this going to be a good year and taken any weather premium out of the markets, now that we actually have a weather market, it makes sense as to why the market might be building that premium back in. So on a 4-hour chart, moving down the time frame a little bit, beans really haven't given us that full 50% pullback here. So, the 50% pullback for the month, if it happened, down into 1320, 1317, kind of a buying opportunity in my opinion. Right now, though, what we're doing is we're basically holding above this old resistance. You can see it, right here on the chart, right? It was resistance here for a couple weeks. Now we're back above it, and now we're holding that 1340 area that was resistance as support. We're flagging above old support. I mean, it's just a I don't even know what you call this, but a book flip, right? We were bearish below that level. Now we're bullish above 1340 with a swing back up to 1380 to $14 probably in the works is what I would, call for. And if it gives you a dip down to 1320, it's almost a gift. I don't know if it will. I don't think it will at this point. These markets usually don't let people in. And one last thing, I did want to go back to July corn because I didn't go over the 4-hour chart, and we need to drill down a little bit here because July corn actually looks rather bullish, right? The 50% swing from 547 low to 606 high there, trading at 576. We're onwards to 620. Inside of this level, another small 50% level had traded. And I feel like we're nesting and building up and getting ready for kind of that push. And the push to 650, in my opinion, is what should happen. I want to see them take out that 50% swing. That's my upside target in this type of short covering rally. But we'll see what happens. Watch this upward sloping trend line at this point, because if the market starts to fail and slip below 590 and below 580, that could be all she wrote for this upward trend. And we could definitely do our homework and find reasons why. I'm sure 660, this area is holding, but I just see better areas of resistance above. And an area of resistance right now, right? This inflection zone, support, broke through it, resistance, resistance, resistance. Now we're breaking through resistance, right? Similar to that 1340 area we looked at on beans, $6 on corn is a very similar level in July. So, all right, well, that wraps today's strategy of the day, everybody. I hope you enjoyed it and found it informative. If you ever want to get in touch with me over here at Zaner, you can always reach me at 312-277-0110. My number on the screen there. Find me on Twitter, Facebook, or shoot me an email at dhussey@zaner.com. Also, join me every week at 1:30 p.m. Central for the Strategy of the Week webinar, where I go over in a little more detail what we saw today and plenty more charts to hopefully help you put together a successful trade plan. So have a great day, everybody, and we will be back with you as price action develops. Take care, everyone.
Which gets us through August 25th.